Hello and welcome back to our ETF interview series. I'm Toby Laws, Deputy Editor at ETF Stream, and I'm joined today by Julie Guntz, who is the Global Head of ETF Strategy and Partnerships at AllianceBernstein. Julie, thank you for joining us.
Thanks for having me today.
So Julie, for listeners that aren't sort of aware of AllianceBernstein, who are you guys and what are you going to bring to the European market?
Sure. So AllianceBernstein is a global asset manager. We have just over $860 billion in AUM with a footprint across the globe, so the US, Europe, and Asia. And so from an ETF perspective, we also have a global presence. So we launched our first round of ETFs in the US about 3.5 years ago and have grown to 26 products, about $16 billion in AUM, and ETF footprints in the US, Taiwan, and Australia. And so as we think about entering the European ETF market, we plan to bring our active ETFs, our investment-driven process, to European investors.
And why now?
If you look at, ETFs globally continue to hit new records. Global ETF AUM has surpassed $20 trillion. More and more investor types and clients are going towards the ETF wrapper for many of its benefits. European ETFs are also following that trend. So at almost $3 trillion in AUM, we think it's a really interesting time to enter the market, especially in the active space. Active ETFs are at a much kind of newer stage in their maturity in Europe than the US, but we're seeing really good signs of growth. AUM has more than doubled in the past 2 years, and one metric that we like to look at is market share of net flows. So while active ETFs are about 3% of the total European ETF market, net flows are trending closer to 10%. And so this is showing that ETF investors are adopting active ETFs. And so as we see this ETF adoption, we want to give our investors and our clients choice on how to access our investment capabilities.
I mean, I don't think you're the only one to have sensed this opportunity. What can you bring to the table that potentially isn't out there already?
Yeah, I think, we are an active house, and we have, deep-rooted history of research-driven investment processes. And so that's a mix of, true fundamental active research and using modern portfolio management tools, data science and quantitative tools as well. So I think it's the combination of using the tools at hand with our experienced portfolio management teams to deliver solutions to the market. And so, for example, if you look at a lot of the active ETF market today, it's a bit more beta plus rules-driven strategies. I think we're able to bring kind of a broader set of active solutions to the European ETF market.
Yeah. And so I understand from that you're going to go for the more high active share type active products. Does that capture roughly?
Yes, I think it'll be a mix. Like our products are going to span, systematic to more high active share. I think it's understanding what our clients are looking for. What are they looking for? An income solution? Are they looking for a buffer, kind of thematic exposure, or more kind of core building blocks? And so it'll run the gamut of active solutions, but I think we definitely will have some of that more kind of high active, high conviction product as well.
Do you see an opportunity in buffer ETFs?
I do. I mean, I think, our buffer ETF suite in the US has grown to about $1.5 billion. And it's a really interesting solution for clients who are looking for market exposure but want to have some downside protection. And so it's something that, as we develop our platform in Europe, we hope to bring to the UCITS market as well.
Cool. Can you tell us about your first two strategies that are coming to market and why have you selected those two?
Sure. So our plan is to launch 3 fixed income ETFs. They're different flavors of corporate bond strategies, and that's really driven by client demand. 2 of the strategies already exist in mutual fund format, and we've had clients ask us, we really like this investment strategy. We'd love to see it as an ETF. So we'll enter the market with these 3 fixed income ETFs to start, and the plan is to follow on shortly after with 2 equity strategies.
Why have you chosen to launch ETF share classes of the existing funds rather than relaunching the entire strategy as a new ETF?
I think the ETF share class really gives our clients flexibility. It's your money, it's your investment. You choose what delivery mechanism you want once you like the strategy. And the benefit of the ETF share class is that both mutual fund shareholders and ETF holders will benefit from the scale. So it's one portfolio at the end of the day, and then our clients can choose which wrapper. So if you're an ETF buyer, your experience is going to be exactly as if you bought standalone ETF, and the same on the mutual fund side.
We talked about buffer ETFs, but what other parts of your global ETF platform are you going to look to bring to the European market?
Yeah, I mean, I think the way that we approach things, we have a global investment capability, a global ETF team, but we want to make sure that our solutions are focused in kind of our local client needs. And so Europe is not one region, one country. There's very diverse, sophisticated clients and needs at the local level. And so it's understanding, what do our local clients need and how do we deliver that? And so I think it'll be a mix of, we have a wide range across fixed income, equities, buffer. We have an active ETF business in Taiwan, which is very income focused. And so it's really looking at the span of our global investment capabilities and delivering local solutions for our clients here in Europe.
Cool. I mean, you've got lots of other investment strategies. What do you think suits the ETF wrapper in general and what doesn't?
Yeah, I mean, I think one thing we really focus on the ETF wrapper is understanding the underlying liquidity of the asset class. And so as new teams come to me with ideas, whether it's, sales teams, portfolio management teams, we really test, the liquidity of the underlying and make sure that ETF is the right vehicle, because it's not the right vehicle for everything necessarily. And so we work closely with our capital markets team and the broader ecosystem to understand what the trading experience will be like for our clients in our ETFs.
And one of the most commonly cited challenges for success in the European ETF market is distribution. How do you plan to sell your products?
Sure. So we've been working really closely with our country heads in our target regions from the start. So they've been along the journey with us, identifying not only what type of clients we think would buy our ETFs, but now we're at the point of targeting specific clients. And so I think having that distribution, engagement, and partnership from the start will help us hopefully have success once we launch the product.
And how big is this opportunity for AllianceBernstein? Like, what is the size of the prize?
It's a good question. I think we're early innings, using an American baseball analogy, in active ETFs in Europe. And I think given the number of issuers that are coming to market and the breadth of product that are coming to market, the rising tide lifts all boats in that I think more clients will adopt active ETFs. And so, we will continue to see growth in the vehicle, not only with existing ETF buyers, but traditional fund buyers who then see, some of the benefits of the ETF around the liquidity, the transparency, the competitive fees.
Julie, thank you so much for your time today. And everyone else, see you at the next ETF interview.